people have this feeling of, oh, I missed the boat on Bitcoin, so then time to go gamble on some shit coins, or time to gamble on, taking over leverage or too much leverage, or just gambling in various ways. When, to be honest, for most people, what you should be doing is just buying and hodling, right? Like just simple buy and hold. Don't worry too much about doing other fancy pants things. Of course, yeah, if you really want, you can go and do mining. If you really want, you can do like treasury company stuff. If you really want, you can do leverage stuff or whatever. But honestly, for most people, you should just be buying and hodling and don't worry too much about advanced things.
I agree. I mean, it's I don't want to dox her, but a friend of mine who got into Bitcoin in 2017, I think she set up a DCA for like $25 or $30, regular purchases. And then I remember she told me she looked back in 2024 and she had accumulated close to $1 million worth of Bitcoin. And it was an unbelievable, like the price of a meal. I think it might've been daily, like the daily price of a meal, that she just started, she set it and forget it. And then all of a sudden there's $1 million sitting in her wallet, and, or $1 million of value, right, of Bitcoin. And that's just the power of that. I've noticed it in my own activity. When I set something up small like that, it really has a meaningful impact over a long period of time. And so many people don't, I guess it's like they don't have that get rich slow mindset. Their ego is driving them like, I got to make something happen right now. And this is like the thing that Saifedean is always trying to teach all of us, right? This longer term mindset, this shift to time preference. And it seems so difficult to get across to people. Have you had any success in the way, you're educating people to get them to go in that direction?
To be honest, some of it is personality. Like if you are the personality now, maybe I'm fortunate in that growing up, even my first paycheck, like working at the local supermarket down the road, being like a trolley boy and a shelf stacker, I just naturally saved most of my income, right? So maybe there's elements of personality, or maybe it's genetics, maybe it's culture, maybe it's upbringing. Maybe you just have natural inclinations towards, some of us just are naturally saving type of people, and other people are just naturally maybe more just sort of spend freely. Of course, as someone like Max Kaiser might say, Bitcoin, you don't change Bitcoin, Bitcoin changes you. And that there are a lot of people who, after coming into Bitcoin, they actually shift their mindset and they actually do start to think of saving and so on. But that's really the ones who've, let's say, gone down the rabbit hole. So it takes some time. It's a process. Not everybody makes that leap. Some of us had an advantage in that, or maybe we just kind of already had a inclination that way. But it definitely is a very powerful thing that if you can just do the basic, like just save in Bitcoin. And it's interesting. We say like get rich slow, but if you were to look at the amount of, look at the amount of time people spend trying to get rich other ways, right? Think about how much content there is about whatever dividend investing, like normie fiat stock investing, or just normie like go and do physical property investing, whether it's Airbnb stuff or whether it's flipping or some other thing. Think how much time people spend. Or if you go talk to a normal property broker, they might be sharing quote unquote success stories of, oh, I helped a client or I helped someone buy this property and they hit like a double in like 4 years or something. Even now on power law trajectory with Bitcoin, if it's growing about 40% per year ish, you're looking at basically a double in 2 years, right? So if a double in 2 years time at current pace or current trend is not enough for you, it's like, whoa, maybe you are actually like really trying to get rich quick, like super quick.
Yeah, for sure.
So it's important just take perspective there. Now, yes, to be clear, I believe Bitcoin is gonna diminishing returns over time in percentage terms per year, but right now it's around 40%, and it's going to slowly taper down over time. On average, of course, there'll be ups and downs, but that's still incredible compared to most people will not beat that return. And so you are best off just kind of, it's an ego test as well, right? You don't have to think, hey, yeah, I can like do this other thing and be even faster than Bitcoin. When look, 99% of people should just be like, just do the basic thing. Just live within your means and just stack sats, right? Just humbly stack sats, submit to the process, and sooner or later they'll wake up just like your friend, having accumulated a decent nest egg.
Yeah. So how do you square that with the volatility in Bitcoin right now? Right. So we've seen, I think Bitcoin scratched low 80s, up to 90, back down to 84 yesterday, back up to 91, I think, right before this podcast, and traded in a band of say 90 to 120 for months and months and months. So people are like, poke it with a stick, do something. And then it goes down instead of everybody's low targets of 150, high targets of 750. How should people be thinking about this volatility? How do they best take advantage of it? I think you said something like that when you've been in the game long enough, you just get numb to the Bitcoin volatility. You get numb to the price drops. And so what is the mental model for that? What is the best way? It seems to me like dollar cost averaging obviously is going to be the best way to deal with that, but I'd love to hear your thoughts.
Yeah, it's a few things. So part of it is zooming out, as every Bitcoiner, as hardcore maxis normally say, hey, zoom out. Don't worry so much about like some little swings here and there. It's been way more volatile in the past. I think part of that is, I kind of joke about it, and we're on a podcast now, but part of the meme you might have seen online is 40 HPW, 40 hours per week. I know it's kind of a meme, but unironically, the people who listen to 40 hours of Bitcoin podcasts per week, they're kind of taking in these ideas, and it feels normal to them to just be either all in or very highly allocated to Bitcoin. And so that arguably helps you sort of stay in the game. And, sometimes listening to podcasts can help you remember why you're here. And that is kind of what helps you get over those hurdles. Of course, things like having Bitcoin meetup groups, having friends, especially if you've got like a closer friend or two or family member who is kind of huddling with you, that can help you also, because you'll have somebody to bounce your thoughts off. You sort of feel like, oh, whoa, hey, man, we just took a dump from, 125 down to 81K recently. As we speak now, it's just under 92K. But yeah, I think it's a combination of all these things, and just sort of keeping your head in the game, keep on stacking. And remember, it's like the classic saying, right? Price is what you pay, value is what you get. And I was saying this just recently as well, right? Like if you liked Bitcoin at 126,000 just recently, you should be loving it at 86,000, right? So Just remember, this is a great opportunity. If anything, we are now maybe in the range of 20 to 25% down from the power law trend line. So it's quote unquote good value right now. So you should be feeling good about any sats that you're able to stack at these levels, because I mean, none of us knows. We could go lower. Who knows? But I'm bullish. I think we're going to be on the way up sooner or later. A few other kind of macro things are kind of floating around, whether it's, I don't know, is the Fed going to cut rates? Is Trump going to announce Hassett, who is going to theoretically be a dovish person, because everyone knows Trump likes low rates. He wants to get them down. So if he can get his favored guys into the Fed to achieve that for him, that's going to cause, obviously, for most risk assets, NGU, obviously Bitcoin is a risk asset, at least for now. And so that's going to drive NGU. So sooner or later, I think we're going up.
Are you a believer in this idea that the debt refinancing that needs to happen in 26 is going to, or it's necessary to get rates down, therefore it's necessary to pump liquidity so that debt can be refinanced? Is it almost like inevitable that this then becomes a bull market at some point in 2026 again?
So I wouldn't know enough to give you like a detailed answer there, to be honest. But to me, it's more like just kind of a broader sense of, hey, look, just zoom out. The US government has 38 trillion in debt. And don't forget, it's not just the US government. Japan is doing this stimulatory action as well. So it's going to be happening all around the world. I ran a quick, just AI query the other day. maybe a month ago or 2 months ago, maybe a month ago. How many top 10 GDP nations have, what is their debt ratio? And I think off the top of my head, I think it was 7 of the top 10 have debt to GDP above 95%. Right? So this is how much in debt these nation states are, the big ones all around the world. And so when they have this much debt, what's the obvious thing? Yeah, they're going to need to inflate that away. They're going to debase. So yes, it is about structuring your life in a way where you don't like need the price to go up, tomorrow, right? Like that's why don't be a degen leverage trader. But if you structure your life, i.e., have keep accumulating Bitcoin and be in a position where hopefully you have income and you're living within your means so that you can regularly keep on stacking sats, eventually they're going to print, and that is going to obviously pump our bags, speaking frankly. So now for some people, if they're more advanced, maybe like a small fraction is where they can do like debt and leverage and stuff like that, but I would say that's kind of more in the advanced category. For just everyday people, just unlevered stacking sats and hodling in your cold card or whatever hardware wallet or multi-sig is the way.
Yeah, it really works. We've seen in our client base at Byte Federal, a large percentage of people that buy regularly become millionaires just by how many sats they bought from us and sent to their wallet, and it's really phenomenal to think about how many millionaires we've helped create over the years. And I think that's fantastic advice. Let's transition to treasury companies, because this is kind of a hot topic these days. And I know you have spoke with a lot of the CEOs of these companies. I'm wondering what you think about the current environment for these treasury companies, that many of them are at or below their MNAV. And I'm wondering if you see a shift coming in the way some of these treasury companies are going to operate, or if it's stay the course and they'll just reemerge as dominant players in the next cycle. What are your thoughts there?
Probably, I guess, out of what you said, mostly just stay the course. Right now, yes, there'll be little innovations and course corrections, even as Michael Saylor is doing with strategy. Right, so the recent news there is that they're doing, I believe it was a $1.4 billion USD reserve. Now, some people, it's funny, while we're here, we might as well discuss, right? Because he was taking criticism on both sides there, right? Because the purists were saying, what do you mean? I thought it was like a melting ice cube and da-da-da. Like on that side, they could say, well, are you not convicted in Bitcoin? And then on the haters side, like the fiat haters, they were sort of like, oh, look, see, like he's admitting, or they were trying to say, look, he's like shorting his own currency or whatever, or shorting his own stock or whatever. Well, no, I don't agree with that. I think it's a pragmatic step. And it's funny that there were kind of both Bitcoin purists and, let's say, fiat haters who were not fans of that move. Right. But I think it's sort of like training wheels. It's kind of like he's just helping the market understand, look, Mr. Credit Rating Agencies, look, investors who are assessing my stock, here, I have this much USD that I can use to pay out the dividends and any fiat obligations that may come. Therefore, look at all these other Bitcoin that I've got and the ability that I'm able to use this machine, MSTR, as well as the preferred options, preferred shares, to stack more Bitcoin. So I'm of the camp that, yeah, right now it's in a lull, obviously. A lot of these treasury companies are down from the high. So be it. That's part and parcel of the volatility that you take if you're going to, go into treasury companies. So the way I see it is, if you are going to partake, it should be more like dabbling in the treasury companies. And again, I would say it's optional, right? It's not that like everyone has to go do this. For, like I said, for most people, just buy Bitcoin, just self-custody it, and you'll be fine. But treasury companies can be interesting if it's like, if you're interested in sort of assessing them, you're okay with a greater level of risk. And then in those circumstances, it can make sense for, if you're dabbling with a smaller portion, let's say, of your overall bucket of Bitcoin exposure. That's how I'm seeing it. The way I see it is both Bitcoin operational companies who are stacking Bitcoin can work, as well as pure plays. I think either one can work. It's about having the right conditions. It's things like having a competent management team, taking on good terms of debt, not taking on, let's say, terms of debt that are too short or terms of debt that are too restrictive, or maybe the covenants are requiring you to, risk too much of your stack. There's various ways that things can fall down or be done the wrong way. And I still do believe it is going to be a mostly it's going to be a winner takes most market. So strategy obviously is number one. I don't think anyone's going to catch them, but can you be a winner in your jurisdiction or in other jurisdictions? Yeah, I think that is where some of that game will be played. And I think it will just kind of wax and wane. And so some of that is sentiment. And so once Bitcoin, starts to pump again, like if Bitcoin were to go to, I don't know, 140 or 150 really quickly, then all of a sudden you would start seeing MNAVs expand again. And then we'd start seeing the hype. And, I just think it's just going to be this kind of roller coaster that, you need to be, if you're going to play that game, you need to be ready to pull the G's per se. You need to be, kind of ready to deal with the volatility. And if you're not, hey, no shame, just stack sats and, be humble, as the saying goes, right? Stay humble, stack sats. So I guess at a high level, that's how I'm seeing it. Of course, we can get into more detail about whatever ATMs and convertible notes and preferred shares and so on. But yeah, broadly speaking, I think the sector will grow, but there are and will be failures, and there will be examples where it's like, yeah, look, some investors they bought way too high, right? So as an example, the hype, let's say 5-6 months ago, like kind of middle of this year, 2025, there was obviously massive hype, and probably people were overpaying on the MNAV, right? I.e., they were overpaying for these common stocks, and so that I would say that was where the mistake is being made, and people are learning that now. And so I think now it's sort of like making sure if you get a good entry, and thinking about where you believe that company is justified in terms of MNAV. Like, I guess, because what we're talking about here is, do you believe they are able to justify some kind of premium to 1x MNAV? I believe that answer is yes. The question is, how much of a premium? And so that is where you have to do your own analysis of, okay, look, if you just had an ETF, if you just go buy IBIT or FBTC or whatever, you're not getting more Bitcoin. These companies, to be very clear, that with additional risk, they are getting you more Bitcoin. And so how much is that worth to you? What price are you willing to pay for that? And do you believe you're getting a good entry, and that your hold period is going to be long enough such that you will eventually end up having a claim on more BTC than when you first made an entry into that particular stock? So I think that's one way to understand it. But in this industry, there can be times where you are down, right? And it looks bad for you. Like a common example now is look at the miners. Just a few years ago, everyone hated the mining stocks. They were like, no one wanted them. It was seen as like a horrible thing. And now all of a sudden, like, then recently, a lot of the Bitcoin mining public mining companies were all catching a massive bid, and they were now into the AI stuff because of their energy contracts and etc. And so now then they became the belle of the ball per se, right? When just like a year or two ago, they were in the dumps, no one wanted them. I think it's going to be a similar thing with these treasury companies. They will just go through these cycles, and arguably the treasury company cycles are kind of happening on an even faster time frame than the broader Bitcoin cycle, right?
Yes.
So we'll see exactly how that goes, but I believe the treasury companies are here to stay. I believe they can justify some premium to 1x MNAV. Of course, others may disagree. The real debate is how much of a premium can they justify.
So you've heard Bitcoin is the new gold rush by now. As world leaders on all sides have endorsed it as the future of money, and now you're looking to get started, we'll show you how. It's actually easier than you think. First, go to your nearest Byte Federal ATM and turn your cash to coin. Byte Federal has over 1,200 locations around the country with the highest daily limits. Go to our website, bytefederal.com, to find the nearest ATM to you. Log in to any wallet, then create an account, deposit your US cash, and instantly convert it to Bitcoin. That's it. We are the only US manufacturer and operator in the Bitcoin ATM industry, and our US-based live customer service is second to none. Go on, give it a whirl, and don't get left behind. Click the link below.